we go. Let me clean my camera though. It really don't matter. I'm here right now, but we thugging, man. Let's see. Share screen. Tire screen. Oh. Shit. Alright, bet. We thugging. Y'all should be able to see me. Y'all should be able to see everything. If I leave, how can I leave? Get this on my screen. Alright, boom. Now let's come here. Alright, boom. Like I told y'all, today is really just a overview day. You know what I'm saying? So today we really just gonna go over everything we just learned. Everything we learned, all the little basic shit. We finna go over that. If you've been in here since day one, then I hope that y'all have got some type of understanding, some type of basic understanding, bro. Some type of basic understanding. Where my notes at? Hold on, y'all. All right, so boom, yeah. Like I told y'all, today is an overview day. Today gonna be an overview day, and tomorrow is going to be tomorrow I'ma just I ain't gonna lie. Oh damn, today Friday, ain't it? Damn, y'all, I can't even finish my last video tomorrow. And that's what my goal was do. Like for myself, I put my goals. I told myself that I want to finish this whole little series before February 15th. And I started on December 17th. So I gave myself about a month type shit. But yeah, I wanted to finish this shit before the 15th. But tomorrow is the weekend, y'all. And day 10 was gonna be me showing y'all like my strategy and how I trade and stuff like that. I lucky was just gonna do like a live little series or whatever, you know? Like I was just gonna go live and then you feel me? I was just gonna be recording my screen whenever I take my trade so y'all could kind of see it like that and shit. But today is Friday, and as y'all know, the market is closed on the weekends. So I guess we'll just wait until Monday for real, for real. We'll just wait until Monday. That's better anyway, because Monday have better volume in the market. Because Friday is it's not good movement today, y'all. It's not no good movement. I would want a full break above this level if I wanted to take a buy. Anything under is just kind of noise. See, everything is just choppy. You know, it's not really moving. It had a lot of big movements yesterday, though. That's probably why price did. Like, everything dropped a lot last night. Yesterday, shit was dropping like 3%, 2%, all that shit. So, everything is really choppy right now, y'all. Everything is really choppy. So, I can't even show y'all, like, the way that I trade or, like, you know, I can't even show y'all my trading shit. But hold on. Let me get right quick. Let me get right. Let me get right. Anywho, chat. This is the only that could go but it's level. It's not a full level. I mean, full praise, man. Like, I don't know. Gold is annoying to trade, y'all, but Gold is one of them ones that bitch don't follow. I promise. But we thugging, y'all. We thugging. We had a losing day today. What I was finna do, y'all? I ain't gonna lie. My bad, bro. All right, any fucking who. All right, boom. Overview day. Right? My bad for the delay, y'all. I be getting I be having to get used to this shit, man. I ain't gonna lie. I get sidetracked easily. Oh God. So I'm gonna make sure to put in the comments, skip this shit all the way till 9:10. Feel me? Cause I ain't gonna lie, it's definitely been like 5 minutes, right? And I be trying to make my videos short too. So I don't even know why I just did that shit, bro. Cause I be trying to have short videos and shit. So I don't want to hear nobody complain this shit be too long or whatever. But I ain't gonna lie, another thing I want to do after this series, and this shit gonna probably be some shit down the line, bro. I ain't gonna lie. Cause I can't even say I'm ready for that right now to just be like, I can't say I'm just fully a consistent trader yet. And until I'm that type of trader, I don't want to just be going too far and too big when it comes to this teaching shit. Like this shit right here, I'm comfortable with teaching just because everything I'm teaching to y'all, I fully understand it. You know what I'm saying? And like it's the basics of trading. So it's the stage that I already got past right now and type shit. So I be comfortable with teaching this shit because I know, I'm saying I ain't telling y'all no wrong in no way. But when it comes to my actual strategy and like there's certain shit as far as actually when you get inside the chart, I ain't gonna go too much into depth about that shit on my little channel yet until I'm a consistent trader myself because I don't want to be talking all this shit and whole time I'm not even doing good myself in trading. You know what I'm saying? So for the people who be wanting, like I said, tomorrow, on Monday, I'm gonna do a live video on my strategy. So if you fucking with this shit, bro, on Monday, shit, we wake up about 8 o'clock, 7:45 to hop on the chart. So around that time, I'm gonna hop on live on Monday so that I can make a day 10 video and it's just gonna be like kind of a trading day or my strategy and shit like that. But aside from that, I'm really ain't even gonna talk too much about my strategy or how I trade and shit like that until I could build that consistency so that y'all can actually be following behind somebody who got proof to show and all this extra shit. But for now, you feel me? We just learning the basics and shit because most of y'all that's watching this shit, y'all have never traded in y'all life. Y'all probably didn't know what a candlestick was, what trends were. So, I'm just here to give y'all that information, the basic information and shit like that. But if you want the actual in detail strategy and actually the strategy that I use, I feel like I told y'all this before, but I use trades by size strategy or ICC. You know what I'm saying? And he break it down good. You just gotta make sure you listening. But right here, I don't know if y'all can see this shit, but this is Trades by Side YouTube. Oh shit. This is Trades by Side YouTube, or just type in Trades by Side. He trade ICC, and that's who I watch to learn. Like, you know what I'm saying? That's who I watch to learn. But before him, I watched the full TJR boot camp. I'm lying. I didn't watch the full video. I watched all the way up to day 30 because that was my goal. I wanted to watch 30 days of TJR. So TJR boot camp all the way to day 30. That's what helped me. But TJR was more on the basics, and I'm kind of giving y'all the basics. So as far as TJR, when y'all go watch his videos, you really just go kind of get an overview of the shit that I already taught y'all and stuff like that. And he probably help y'all as far as like to get some actual good notes and shit, because I did people like I didn't tell y'all to make sure y'all writing this down or note this down. You know, I didn't really say that a lot of times. I was just explaining what certain things were. So if you want somebody who gonna actually like be drawing shit down so that y'all can draw that shit on y'all notebooks, go and watch TJR's boot camp. You feel me? It's gonna be over the trading basics as well. And then if you kind of understand the basics already and you ready to be focused in studying a specific strategy, go and watch Trades by Side, because that's who I learned my strategy from. And you know, that's what I've been just kind of trading ICC and really just market structure all around. To be honest, I trade market structure, but yeah, those two people is who I looked at when I came in the game. Those two people, who I was looking at whenever I came in the game and shit. So you know, I just gotta put y'all on to who I was watching and shit, man. Everybody eat, man. But anyways, the overview. So if you've been watching, you know that day one was just about candlesticks and time frame, right? And as you can see, these are the candlesticks. It's a million candlesticks on this chart. Every single thing, every green, every red you see is a candlestick, right? So within these candlesticks, there are wicks. It's a wick to the downside and it's a wick to the upside. And some may not have a wick in a certain area, just like this one. It doesn't have a wick to the upside, but they will almost have a wick at least to one side. And even if it doesn't seem like they have a wick, they really be having those wicks down there. And even this one, it has a little wick right there. But yeah, so you know, that's just candlesticks right here. This is literally candlesticks. Are the things that kind of um candlesticks is the way that you analyze the market. You know what I'm saying? If you learn how to read these candlesticks, you will get far in this shit. Because I feel like if you learn how the market moves, bro, and you study how the market move and how a specific symbol moves, like right now we on micro gold, you learn how a specific chart move or just the market in general how it moves, bro. I feel like it'll take you a long way for sure. You feel me? It'll take you a long way. And that's why I was just telling y'all, I don't really just trade. I trade ICC, which is actually market structure at the end of the day if we're being honest. So, you know, overall, I really just trade I really just trade market structure. You know what I'm saying? Whatever the market give me is what I go off of. But yeah, so these are the candlesticks on the charts. You feel me? And since this is an overview, I'm gonna try my best to draw everything out that I'm explaining. So that way, for the people who may not have no notes written down for my videos, I guess this could be a day of notes and shit. But candlesticks basically look like this. You get a feel me? You have a green candle, and then you will have a oh shit. Then you will have a red candle, right? Boom. So it'll look something like this, right? But you will have a red one, and then you would have a green one. So the candles will look similar to this, right? Now remember, for the people who've been paying attention, and I guess this could be a test day. Every time I ask a question, I'm gonna do a little pause and shit so y'all can answer that shit in your own mind. But yeah, I guess this could be a little test day and shit to see who actually been paying attention. And if you can answer all the questions right, man, you might be ready to get started. Y'all should already be demo trading. Y'all should already be demo trading or paper trading. If you don't know how to paper trade, make a trading view account. Go to paper trade and literally paper trade. Like literally, it's real world situations as well. Like right now, I could get into a trade right now and it's gonna move like real money. Just so y'all can see, I'm getting into a trade just like this. Press buy, and you'll get into the trade. Now I'm gonna get out that trade. And once you get out of that trade, you can scroll up here, scroll down, come to your balance history, and you will see the money you made for today, or your past trade, and yeah, so on and so forth. And it's just a lot of little options down here, and yeah, that's just so y'all know how to use this shit. Because I don't even. That's another thing. Like, I probably need to go into depth. I think I went into depth whenever I made that every app you need video. I think I went into depth with like how to just use all these apps when you get inside them bitches. Cause that's actually confusing too. I'm not gonna lie. Like, it's a little confusing when you don't really know nothing type shit. But anywho, so y'all people, I be getting sidetracked a lot, bro. I start a conversation about some whole other shit. But anywho, so within the market, you're gonna have some red candles, just like these, these red candles, and you're gonna have green candles, just like these candles, right? Green, 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 right? So these red candles, what are these red candles called? These are called bearish candles. Bearish candles. This is basically when the market is going downwards, right? The market is moving down. So we're gonna write that right here. This is called, oh shit, that shit little here. This is called, damn, oh shit, that shit is into a trade, y'all, on accident. And then it won't let me get out. Y'all trading do a lot of annoying shit. Trading do a lot of annoying shit. But yes. But yes, this is a bearish candle, right? This is going to be bearish. Bearish candle. And this is going to be a bullish candle. I forgot to say what kind of candle is this. But yes, this is going to be a bullish candle. If it's a green candle, it's a bullish candle. If it's a red candle, then it's a bearish candle. So bullish, right? Bro. Hey, TradingView do be making me mad though, so I don't even blame y'all if I don't use that shit. Bro, what the fuck? All right, boom. So this is a bearish candle. This is a bullish candle, right? So in bearish candles, it just means it's a move down. So as y'all can see, every time we get these red candles, it's like price is moving downwards. When we get this green candle, it's a up movement, right? Price is moving upwards. Red is down, green is up, just like green go, red stop type shit. Like, you know what I'm saying? That should be kind of an easy part to think of. Green is going up, red is going down. Is that simple? Don't overcomplicate the shit. So a bearish movement is when price move downwards, right? This means that sellers are in control. Sellers are in control and they are pushing market down. Boom. Bruh, I swear this little tech shit keep pissing me off. All right, boom. Sellers are in control and they are pushing the market down. That is what a bearish candle is, a red candle, right? That is going downwards. This is a green candle, which is a bullish candle, right? This means that buyers are in control and buyers are pushing the market upwards. Buyers are in control. All right. So boom, just like this. This shit long. All right, boom. Bearish candle. Sellers are in control. Bullish candle. Buyers are in control and they are pushing the market up. So that's all these candles mean, right? That's all these candles mean. And if you want to, we can do an example, right? This green candle would be a what? A bullish candle, because price is pushing upwards, price is going upwards, right? This red candle will be a what? A bearish candle, because price is moving downwards, right? Sellers are in control when this candle was moving. Buyers were in control when this candle was moving, right? So the whole time throughout this market is literally just bears versus bulls. Literally, it's a big ass market of bears versus bulls. So just think about it like that: bears versus bulls. You know what I'm saying? Because it's a lot of bullish and bearish candles all over the charts, right? So now that we know that these are the candles, let me show y'all what the wicks mean for the ones who may have forgotten. And for the ones who have not forgotten, before I even explain what wicks mean, y'all saying y'all head, what are wicks that are at the end in the beginning of a candle? Well, that are at the top and the bottom of a candle. I guess that's a better way to word it. Right? What do those wicks mean? And for those ones who like, what the hell is a wick? A wick is basically whenever a candle leaves a mark like this, right? Throughout the market, you will see these candlesticks, like we just said, the green one and the red one. And within those candlesticks, you will see little lines at the bottom or little lines at the top. Sometimes they may not even have these little lines, but majority of the time it's very, very common that every candlestick will have these wicks to the upside and the downside, right? All this means is before this candle closed, it went up this far, but it did not close there. It came all the way down here, right? And it didn't close here. It closed here. It came back up. So for those people who's trying to figure out how do I even know that shit, right? For starters, when we are speaking on a bullish candle, meaning price is moving upwards, it's moving upwards, right? Meaning the opening will be at the bottom of the candle. This will be the opening of a bullish candle, the bottom, because price is moving upwards, right? So at this point, this will be the open. This is when that candle first opens up, you know. This is when that candle first opened up. Say right now we on the hourly time frame, right? And again, since we are going into time frames as well, remember that every single candle represents whatever time frame you are on. So since we are currently on the hourly time frame, every single candle you see here represents 1 hour of time. When we come to this 30-minute time frame like this, every single candle you see here represents 30 minutes of time. The same with the 5-minute and even the 2-minute. However far you go down, every single candle you see represents 3 minutes right now, because we are on a 3-minute time frame, right? So remember that. And this is the time frames up here. Up here you can see all the time frames that you're able to use. You know, you're able to scroll down, have your favorites, whatever situation may be. But these are the number of time frames, and every single candle you see represents that time frame, right? Meaning, with this green candle right here, it's an hourly candle. We see right here, this is the time that it has left as well, right? This is the time that it has left, which is 31 minutes. Before this candle got to 31 minutes, it opened here. This was the opening point of that candle, right? Price opened right here. It moved downwards a little bit, right? But it didn't stay there. It didn't close there. It moved downwards because that's what the wick said. The wick said it went downwards, right? Because all the wick is telling us is how far this candle went before it closed. That's all the wick tell you, right? So with this candle, this wick basically went all the way up here before it closed, but it didn't stay up there. It came all the way back down, and then it finally closed, right? So with this candle, same shit. Price opened right here. Price moved downwards, but it didn't stay there. It came back up, and now is moving. And for the next 30 minutes, this candle is going to continue to move, right? Because the hour is not over yet. And as you can see, it is currently 9:29 as well, which is basically 9:30, right? So in the next 30 minutes, we will have a new hourly candle because this hourly candle in this hour will be over. You know what I'm saying? So every candle you see represents whatever time frame you are on. And since we are on the hourly time frame, every single candle you see on this graph right now represents an hour of time, right? But yes, with these green candles, this is the opening. Price is moving upwards, like we already discussed. So price opens at the bottom and it closes at the top. It moves upwards. And the opposite thing goes for them bearish candles, right? Since bearish is a down movement, it's going to open at the top and it's going to move downwards from there, right? Because we are moving down. So, just remember that. Just remember that. Just remember that. All right. And I went into depth about that because again, we're talking about the opening and closing of these candles, and we're talking about the wicks of these candles, right? So as we already discussed it for these bullish candles, right? Price is going to open here. So since price is moving upwards, because what price do is it moves from down here, it moves from down here, and then it moves upwards. So price move like this. It move, oh shit. Price move upwards. With these candles, price move downwards. So it would look like this, right? So if we're going off of this, that's telling us that price opens right here and it moves upwards, meaning the end of this candle would be where the candle closes, right? This is a closure right here. Draw this out right there. This will be close. This is where the candle closed, and that is where the candle opened, right? So this is for a bullish candle that's moving upwards. It opens here, it moves up, and it closes here. So now that we have these wicks at the top and the bottom, that is just showing us how far price went before it closed, right? So say in this situation that this was a real candle, right? And we got this green bullish candle and it had a long wick to the upside and a little wick to the downside, right? So since we know this green candle open here, we're going to assume, make a educated guess that, well, it's a fact that price opened at this level, it moved downwards, right? So this is how the candle looked when it first. This is what the candle looked because it hadn't. Oh, this it just opened, right? It just started. Say it was a new hour, right? We on an hourly time frame. It's a new hour that just happened. So the candle hasn't even became a full candle yet. It hasn't even formed yet because the new hour just started. So what a candle does is it starts at the new level, it opens, and again, what these candles do is they open from the previous level that the last candle closed, right? So as you can see, we open here, price move upwards, then we close right here. Off of this close, the new candle opened right where that previous candle closed, right? And from there, price continued to move upwards. And whenever this candle closed, the new candle will open at that same position the previous candle closed, right? And I hope that's making sense. Like, cause it sounds a little confusing, but like don't overthink the shit, bro. Cause it's not important as fuck, and it's not big and it's not complicated as it kind of just sound when I explain this shit. Literally, like We know that these bullish candles move upwards. It opened here. Let me go to another one, right? We know that these bullish candles move upwards. It opened here. It pushes up during this whole hour. And then they finally close. Well, it comes up here and then it finally closed right there. Off the rip, this candle closed. This candle right here, it closed right at this level. Right after this candle was done forming, what did the very next candle do? It opened right at the same level this previous candle closed, right? The new candles always open at the previous level that the level that the previous candle closed, right? And same for these bullish bearish candles, right? So as we know, these candles move downward. So this candle opened right here. It moved upwards, but it didn't stay there. It came all the way down here, didn't stay there, and then it came back right here. This candle closed right here. Off of this close, the new candle opened right here and went downwards. So wherever that previous candle closed, the new candle will open at that same level where the last candle closed. I really hope that shit made sense. But anywho, so whenever we get these new candles, we would get a new candle, it will open, right? These candles don't automatically form, they form within the time limit of whatever time frame you are on, right? So the candle will look just like this type shit, right? It will look just like this until it form. Say these wicks are not here yet, because these wicks won't be there if the candle hadn't moved yet, right? So these wicks are not there yet. We just got a fucking blank shit right now, basically. Let's see if we can get a good example, bro. All right, boom. All right, boom, 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 boom. This is a good example. So y'all can kind of see, right? So we got 13 seconds left of this 3-minute time of this 3-minute candle, right? As soon as this 3-minute candle closed, we're going to have a new candle and it's going to open at the same place that this candle closed, right? You see, we have a new candle now. That is a new candle right there, this little ass line. You feel me? And as it moves, that's when it gains those wicks. As it moves, right? And let's see if you can get a little movement so y'all can kind of see it actually moves. As it moves upwards, and I'm not gonna lie, TradingView be lagging, bro. That's why you see it's like the wicks growing, but it's barely moving because TradingView be lagging, bro. But as it moves down, the downward wick will continue to go lower if price is going lower than the lowest point, and as it moves up, it's going to do the same exact thing, right? And it's going to do this for the next 3 minutes, right? It's going to do that for the next 3 minutes. So now that was fucking crazy. That was some crazy shit right there, y'all. Y'all seen this shit in 4K, bro. That was some crazy shit. That was some crazy shit right there, y'all. That was some crazy shit. That's the type of shit that made me want to hop in on that bit. But then it do shit like that, it get to dropping and shit. But as y'all can see, price went all the way up here. But it didn't stay. It didn't close there because its time is still going. Price didn't close. It went all the way up here. Then it fell back down. Now, if this 2 minutes was to end right now, it will close right there. And that's just what it will be. It will have a long way to the upside. Why? Because price went all the way up here, but it did not close. It came back down. And whenever the 3 minutes was over, that's when it finally closed wherever it wanted to close. So just remember that. That's all this shit is saying, y'all. That's all this shit is saying. That's how the time frames work. And that's how these candles work. And that's how the wicks work of these candles, right? And just because we are going into depth about all this shit today, I'm actually going to let this shit play out so y'all can see fully in 4K, right? So again, we watched this candle open off the same place that this one closed, right? Making this our open. Making this our open, right? Price open right here. That's what price open. Look at this shit, y'all. And look. All right, boom. We gonna wait till we get a closure. As y'all can see, now it has flipped. Now the candle has flipped. So these candles don't stay green or stay red, right? Once it has turned away from the area that it has opened, it will change over to the next color, right? Because off the open, if it's a bullish candle, it should move upwards. Off the open, if it's a bearish candle, it will move downwards from the opening position. So with this candle, it opened right here, right? Just like we said with these bullies, it opened right here. It pushed all the way up here, right? Leaving this long wick to the upside. And this just shows us the highest point price went. The highest point price went before it closed. That's all it tells us, y'all. This long ass wick is telling us the highest point price went before it closed. We know it opened right here, right? It went all the way up here, but it did not stay. It did not stay. It did go up there though, right? So after that, that's when it fell. It fell. It passed up the opening level. Whenever it passed up this opening level, is the minute it changed to a red candle, because now it has passed up its opening level. It is no longer considered a bullish candle anymore. So from then, price started moving downwards, right? After there, we got a down movement from this candle right here that we're looking at. It started moving downwards like this, right? And price kept moving downwards till it got to this little wick right there, right? That is the lowest point that candle went before it closed. Lowest point price went before it closed. All right? So boom, this little ass wick of this red candle that we've been looking at, that we just literally watched shoot up crazy and then shoot right back down, because this is the candle we're speaking on. We're not looking at this candle right now that's forming currently, right? We're still looking at this candle. This is the highest price went before it closed, and this is the lowest price went before it closed, right? This is the opening of that level, right? But again, we saw a price open here. It shot all the way down here, but it did not stay. Price decided to come back up to this level right here, right? At this level right here is where price decided to close. So this was the opening right here. This was the close. This was the highest price went. This was the lowest price went, right? And it's just that simple with these candles. And it's like that for every single candle you see, whether it's red or whether it's green. It's the same exact concept, right? So I hope that was a good example for real, especially for the people who may have been like struggling trying to figure out like wigs and shit. I don't know, bro. But like it be so much going on the charts, bro, that certain shit seem confusing even when it's not, bro. And that's why I'm saying you have to make it upon yourself to be learning market structure for real. Because once you can genuinely learn market structure, bro, you will fucking once you can genuinely learn market structure, you will understand like all the shit you used to struggle with as far as like, you know, the little basic shit. Like the shit really easy type shit. Like it's easy to understand this shit. Like a lot of the shit that you struggle with at the beginning, I promise you won't be struggling with it whenever you get when you actually start trading for real. Like the problems that I have right now is not the basic. You know what I'm saying? I understand the skill. I understand trading. My problem is low-key. My problem been execution, and timing. My timing, so execution again, and you know, just emotional discipline and self-discipline. I'm in that stage right now. You know what I'm saying? So, but anywho, so yeah, y'all seen how that shit worked. We was able to catch a N4K example, right? So with these bullish candles, price will open right here, right? Price will open at whatever level that, you know, it opens at. And then imagine these wicks are not right here. Basically, we just got a small little candle, just got a little dash right now, just how we seen the last time, right? Right. So for a bullish candle, what they may do is they open right here and price will go down. So as price is going down, this candle is going to be red right now because price is opening here. So if a candle opens and off the open, it moves away from the place that it opens, that will be considered a bullish candle at the moment because it will be considered a bearish candle at the moment because bearish candles are the only candles that open at the top and then move downwards, right? So in this moment where this candle is making a wick to the downside, this will technically be a red candle at the moment. It will be a bearish candle at the moment. But as these candles are forming and moving, they do not stay green or they do not stay red. They stay whatever color they are once the time is over, once the candle is now closed, right? So for these 15 minutes left that this hourly candle has, it's green right now, but at any moment it could flip to red because it's still 15 minutes left. Anything can happen, right? But until this time is over, this candle is not even considered a bullish or a bearish candle yet because it haven't stick yet. But once this 15 minutes is over and this candle closes exactly how it is right now, it will be considered a bullish candle. But before the 15 minutes is over, it can flip and turn to a red candle, right? So if it does decide to flip, all that means is the candle opened right here, right? And as we know, that means the candle in this situation it opened right here, right? So all it would means is if the candle flip and turn to a bearish candle, it comes right by its opening level and it goes away from that level, just like a bearish candle would do, right? So within this time of the candle forming, the candle would be red at the moment, right? But that's when price decides to come back up because price is moving this whole time. It moves, right? So price came down, but it doesn't want to stay there. It came all the way down there, and as it come back up, it leaves a wick because it's showing the lowest point price went before it closed, right? So then it comes back up past its opening level. Once it passes its opening level, this is now when price will flip to a green candle because now we know it's starting to be bullish. Only bullish candles open and then move upwards from its opening level, right? So then we will see price start to move upwards like this. Sometimes it come back down, then it come back up, then it come right back here, then it just do its thing. Price it just moves how it moves, right? Then as you see, price can go all the way. Well, I'm not gonna make it crazy. Price gonna come all the way right here, but it didn't want to close. Price continues to come back downwards, down, 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 and then it decides to close right here. Right? Boom. Now we close. Now we have a candle, and it will look just like this. It will look just like this. Right? So I hope y'all understand this. That was a good example on fucking candle close, candle open, candle wicks, bullish and bearish candles, right? And we could do the same example for this bearish candle because it's all the same. It's all the same. So since price is moving downwards, that means it opened right here, right? So that's gonna say this candle hasn't been formed yet, right? We haven't had a formed candle yet, and it first opened. So say if it opened right here, right? Price probably will move forward first. It will probably go up. So since price is moving upwards from the point it opened, what color is this candle going to be right now? Since price is moving upwards from the point where it opened, what does that mean this candle color is right now? Green. Only a bullish candle will move upwards from its opening point. So say with this candle right now, it's opening here, but before it goes down, it decides to come up a little bit, right? So as it's coming up, this candle is green right now because it's moving upwards from its opening point, right? It comes all the way up to this level, but it doesn't stay, it doesn't stick. So it decides to come back down again, come back down. Now it's coming down here, right? Now we're coming down, and since it came all the way up here and it's no longer up there no more, it left a wick right there because that's the highest point it went while this candle was forming, right? Now, since we came back to this open level and we moving away from our opening level, now this candle has flipped to a red candle. And now you can see price is moving downwards. It will be moving downwards, 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 downwards. But before it could just close, it want to come all the way down right here. But it doesn't want to stay there. So it decides to come back up. And as it comes back up, you see it leaving a wick. Showing you the lowest point this kind of went before it closed, and it decides to close, and it will look just like this, bro. So I ain't gonna lie. I really hope that was a good ass example, gang. I hope that was a good ass example. And I ain't gonna lie, that candle earlier was a paid actor. So genuinely, that candle earlier that shot up crazy when we was looking at it, that kind of should have showed y'all. That kind of should have been the example right there, bro. So I'm kind of glad that candle did what it did. I'm kind of glad that candle did what it did. But price will close right here. And then price will open here. And I'm just, like I told y'all, I'm trying to practice on getting y'all to, this for y'all notes and shit. Right? And so for the down wick of the bullish and bearish candle is going to be the same. Right? It's going to all be the same. We can even do it like this. Fuck it. From this wick, these down wicks, the lower wicks, how low the candle went before it closed. This is how low the candle went before it closed, right? Right. Put that shit green. And then this one, which is the top wicks of these candles, are the same. The highest point this candle went before it closed. These wicks to the upside, these upside wicks. The highest point the candle went before it closed. Oh shit. So boom. Bada bing. Damn. Oh, all right, bang. All right, boom. Just like this, y'all. Make sure y'all write this shit down. That's how the shit move, bro. Feel me? But bearish candle. Sellers are in control and they are pushing the market down. A bearish candle opens at the high. It opens at this level. Then it moves downwards and it closes below the opening level, right? Leaving 2 wicks to the upside or the downside, may or may not. The downward wick shows you how the lowest point this candle went before it actually closed. And the top wick shows you the highest point this kind of went before it closed. And same thing for these bullish candles. My bad, y'all. Bullish candles means that buyers are in control and they are pushing the market upwards, right? Meaning price open here and move upwards from that point, right? It has a wick to the downside showing you the lowest point price went before it closed this candle. So a wick to the upside showing you the highest point price went before it closed this candle. Price opens here and move upward. If price decides to open here and then move downwards from the point where it opened, it would be a bearish candle at that time. But if price opens here and move upwards from the point that it opened, then it will be a bullish candle. It will be a green candle, right? So that is the candles. That is, what I'm saying? The candlesticks right there, bro. That's the candlesticks. And again, every single candle you see on this chart represents a time. So since we are on the hourly time frame, every single candle you see on these time frame on this chart represents 1 hour of time. If you go down to the 1 minute time frame, every single candle you see on that chart represents 1 minute of time. So just remember that. But at the end of the day, the story is the same. The full story is the same, right? Throughout these whole candles, because it's the same market. And that's why whenever you're taking your trades, you want to stay on the highest time frame. Whenever you're trying to find a setup, you want to look at the higher time frames, because the higher time frames tell the better story. The higher time frame holds the most power. So the higher time frame is literally going to be your bird eye view of things. So, you know what I'm saying? Make sure you're looking at these higher time frames because they will show you the levels where price has been consolidating for a while. They'll show you where you need to wait until you want to see price actually break. This is what the higher time frames will show you, the 4-hour and the hourly time frame. They will show you clear levels, right? Once you have those clear levels identified, you would then want to go to these smaller time frames, these 30-minute or the 15 or even a 5-minute time frame, so you can get a view of what's actually going inside of this shit, right? Because that's all it is. These smaller time frames just give you a view of what's actually going in, what's going on this hourly time frame. You know, we use the 5-minute time frame to see what the hourly candle is doing, type shit, right? So say for instance, right now, we have 5 minutes left of this hourly candle. If we go down to the 5-minute time frame, 5, 10, 15, 20. Oh, now it's gonna be another one. So 5. So right here. So from here to here, which is this candle still forming, that is the full hour, right? So if I say I want to get a view of what the hourly candle is doing, I would see that this is the time where the hourly first. Oh wait, this is the time where the hourly first started. Since this hour candle has been moving, this is the highest point that candle went. And I'm gonna actually mark it out on the 5-minute time frame so you can see it adds up when we go back to the hourly. We want to come into the 5-minute. What I'm doing is we're coming into the 5-minute time frame so that we can see how the hourly candle has been moving during this past hour, right? So it's basically finna tell us what has this market been doing from 9 o'clock to 10 o'clock. Basically, 10 is not over yet. So after this 5-minute candle is over, we will have a new hourly candle as well as a new 5-minute candle and every other candle on the other time frames, right? Because it would then be a new hour. But anywho, boom, 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 boom. Where is it? 15, 15. So boom. Since this is the beginning of that hour, right? If we want to come and see what this hour been doing, we can see that this is the highest point that price went since here, right? Because this is where that hour started. So we only care about everything moving forward. If we just trying to figure out what's going on in this hourly, and I'm actually draw it so y'all can see what I'm looking at, and this is just going into the time frame now. So this is where this is the count. Ah, shit. Where is it? So this is the candle where the hourly started, right? And the hourly is still going. Once this 3 minutes is over, this will be the last candle of the hourly, right? So the hourly is from here to here, right? If I'm trying to see what the hourly is doing, I can come down to the 5-minute time frame and I can see this is the highest point that hourly candle went. And we can actually draw this out. This is the highest point that hourly candle went. And within this hour, this is currently the lowest point this hourly has went, which is right here, right? And we can come to the hourly and we can see that this is facts, right? And we are still in this hourly time frame. This is the same candle, right? The highest point, which is up here where I drew it, and the lowest point, which is currently right now where I drew it, right? So that's all these time frames are, bro. The smaller time frames is literally so you can see the smaller pieces of what's going on inside those higher time frames. Just the same for the 4-hour. The hourly is literally, the 4-hour time frame broken into pieces type shit. That's just all it is. And it goes as you go down, it goes down. Man, I don't know. It goes down, bro. It goes down with the fucking time frame type shit. But you're looking at the same shit. Like, just because you go to the 15-minute time frame, don't mean it's a whole different situation than the hourly. It's all the same shit. It's just broken down into pieces, the smaller time frame you go into, right? So with that being said, that I'm telling y'all that the hourly and the 4 hours the most powerful time frame that you could look at, especially in day trading. Now, if you swing trading and shit, you could go to the daily or weekly and get your shit like that. But for us, we day trading right now. We in front of the computer right now trying to catch a little money here and there. So we gonna look at the hourly time frame and we gonna look at the 4-hour time frame first because those are the most powerful time frames. We want to take our bias off these time frames. The hour and the 4 hour is going to tell us, are we going to buy and sell today? Right? They're going to give us our actual direction of today. Once we figure out the real direction that we're going in for today, then you can scale down to the 15, the 5 minute, the 30-minute time frame and figure out where your entry level would be, or figure out if price left any fair value gaps, or figure out just what's actually going inside the market now that you have figured out what direction price is going. You know what I'm saying? I don't know if that shit made sense, man, but shit. Hello. Y'all people, we never got to close. Look, that's another thing with these candles, because that's what I trade off of. You know, full candle closures. Me, what I would want to see is, again, I trade off market structure. I would notice that, you know, prices drop below this level. We had a big imbalance right here, fair value gap. Price is kind of choppy at the moment, so it's not really any good trades, but price keep coming to this level and it keeps falling. So at this level, what I would then do, I would have had, because this just became a thing, these two candles. So I would have had my lines at these consolidations levels right here, right? At the highest point of the consolidation. I would have had it here, and I would have wanted a full break above this level on the hourly time frame. I want a full break above this level on an hourly time frame first, or at least a 30-minute full break, right? So I would want a full break above my line, which would look something like this, a full break. As you can see with this green candle, that was a little ass break. That's the reason I would have been skeptical, and I wouldn't have been mad that I was skeptical, because as you can see, the second candle literally, it didn't just go to hell, but it didn't hold its structure, you know? Like, it didn't hold any type of uptrend structure or nothing. Like, it started back consolidating type shit. But if you trading off of volume, meaning if the market is not actually moving and pumping, I really don't want it. Like, it's moving choppy, it's moving in small little, like, it moves in one tick and five and fucking 30 seconds and shit. Like, no, bro. And you can kind of see the difference, because right now it's Friday, so we just as price action. But say come Monday or Tuesday, 9:30 on the dot, bro, you will see the volume starts to grow. Like, you will literally see candles start moving faster. Not just crazy fast, but they move faster than what it is right now. Like, right now is low volume. The candlesticks are moving slowly right now. So for that reason, it wouldn't even be any good trades, because a lot of the times with low volume, you may see a setup that you like, but it's small ass candles. So, you know, it may be a setup, but you may fall into consolidation, or price may disrespect the real structure just because it don't even have any volume type shit. Like, you know, so what you want to do is, bro, you want to trade the best time of trading, right? Which is going to be New York session, whenever everyone is on the market, whenever all the banks and institutions are open. So yeah. But me, I would have my line there. I would want to see a full break above this level, similar to this. You know, I would want to see something. It would have been amazing if we could get a break closing past this full fair value gap. And actually, since we are done with candlesticks, we can actually go into the next. We could go into fair value gaps right quick. Just because I'm speaking on fair value gaps right now, so everything could be a. Make sure y'all draw this down. I hope y'all already got everything drawn down. For the ones who may not, this is what it looked like. Boom, boom, boom. Boom, boom, boom. But now we're going into the next topic. Again, y'all, this is the overview. So this video may be very long. This shit may be long, because it's a full overview for real, for real. But I'm going to try to go as fast as possible. But not too fast. Like, if you understand the shit, you don't got to watch this hoe. You can kind of skip past shit. If you kind of understand everything, you don't. This not really a must-watch video type shit. It's just a, you know, for people who want that extra study, we're trying to go over everything, and who wants some questions and shit. Because like I said, I'm trying to ask y'all some questions about everything. Fuck! I should have asked y'all that question. But boom, this is an imbalance. All right, this is a fair value gap where I just marked out. Since I didn't ask y'all where is the fair value gap that I'm looking at, I'm gonna ask y'all, why is this a fair value gap? Why is this a fair value gap? And where did my box come from? Why did I just draw that box out? All right. So if you know, a fair value gap is a 3 candle pattern, right? A 3 candle pattern. All a fair value gap is when price moving so fast that it leaves a gap between those candles, right? So for this fair value gap, it's going to be candle number 1 right here. I wish I could have black. Black is kind of better. This is going to be candle number 1 right here. This is going to be candle number 2, this big one. And then we're going to have candle number 3 right here with this wick to the upside, right? So we have our 3 candles. And we're going to change the color of this one to green and this one to green too. Boom. So the gap that is left is between this first candle and the third candle. That is where the gap comes from, right? But the person who leaves the gap, well, the candle who leaves the gap is the second candle. Like I told y'all, the fair value gap is a 3 candle pattern. 1, 2, 3, right? The second candle is the candle that causes that gap. This is the candle that moves, that has that big ass up movement, a big ass down movement, right? The second candle is the one that divides these 2 candles, that cause the gap between these 2 candles, right? But anywho, the second candle is the one that shoots up, shoots down. It has that big ass movement, right? When it has that big ass movement, that's when price divides that second and that third candle, and that's where the gap comes in at, right? And all this means is price moves so fast, it left a gap in the market. And 9 times out of 10, price will come back to tap that level, to tap the gap of that fair value gap. They continue to move downwards or continue to move upwards. Or what it would do is it will leave a gap, and then price will later come back to that gap, and it would disrespect that gap, leaving a inverse fair value gap. And all a inverse fair value gap is whenever we have a fair value gap like this, and say we mark out our box how I just had it, and we have another fair value gap come up and move within that fair value gap, like it closes inside of this fair value gap. So right now you can see we have a bearish fair value gap is moving downwards, right? And your fair value gap, all the colors does not have to be the same. What matters is the second candle. Whatever the second candle is, it's showing us if it's a bearish or a bullish fair value gap. The second and third candles, they can be any color, but the first and third candle could be any color, but the second candle is showing you whether it's a bullish or bearish fair value gap, right? So since this is a bearish fair value gap, we would then have our box right here. We would, the box comes from, like I told y'all, the box comes from the first candle and the second candle, and the first candle and the third candle, bro. And the second candle is what divides those 2 candles, what leaves that gap, right? But a lot of times, price don't always leave a gap. It's important. It's only a fair value gap if it leaves a gap. And what I mean by that is we don't want to see none of these wicks overlapping. So when it comes to the second candle, it needs to be clear. It don't need to be no wicks, and it don't need to be no wicks in the gap of that second candle. It don't need to be no wicks overlapping the second candle. So as you can see, we got a big ass red candle, big ass bearish candle, and it's clear as well, right? So say right now this third candle, instead of closing where it did, and leaving a wick where it left one there, say if it came up like here before it closed, it decided to come all the way up here, right? At this point, it would no longer be a fair value gap, because if this was a long wick like this, where would the gap be? It wouldn't be any gap, right? A fair value gap is when price moves so fast it leaves a gap between the first and the third candle, right? Again, this is the first and this is the third. Where's the gap? It's no gap, right? So it would not be a fair value gap. But again, a fair value gap is whenever price leaves a gap between the first and the third candle. This is the first, this is the third, this is the second, right? So boom, boom. The first candle is right here. The gap comes from the bottom of the first candle and the top of the third candle when we're speaking on a bearish fair value gap. So the bottom of this first candle will be here. the box, the gap, the fair value gap, the actual gap of the fair value gap will be measured from the bottom of this first candle, the wick, the bottom wick of this first candle, to the top wick of the third candle, which will be right here, that wick right there. So we would then mark it out like this. And as you can see, this gap is measured from this first candle to this third candle, but the actual gap came from the second candle and how far it moved, right? How far it divided these two candles, right? So that's just where the gap comes from. It comes from there. And a lot of times what price do is it tap back into this level, right? And then after it tap back into that level, it starts to come downwards. So a lot of people try to like, how can I use this in trading type shit? And the way you can use it in trading is because we know that price is going to come back to this level 9 times out of 10. We know if it leaves this big ass imbalance, it's going to come back to that level. So say for instance, we took a short position, we left a bearish fair value gap, we waiting for price to come back into this level, right? Let's say right here, because it technically came back. Say we wanted to enter right here. We know price was moving downward. So boom, we want to take a short, right? Boom, we enter right here whenever price first tapped into the level, which is right there. You would have probably tried to enter right here, and then you could have took it back down to these lows, and then you could have had a stop loss right here, and it would have cashed just off of you knowing what a fair value gap is, right? Just because price tapped into that fair value gap and started moving back downwards. Now, ideally, we want to see price start moving back downwards and actually make a downtrend, right? And as you can see, you would have been able to catch this trade, but that's all it would have been, right? But what we usually want to see is price come up, come down, it tap into this level, it tap into that level, but it don't close. So it tap into here, and then it comes back down, and then it starts to make a downtrend after that, after it taps. That's what we would want to see. That's what structure looks like, bro. But as y'all can see, like I told y'all, it's been as price action. So that's not what it did. But that's kind of how you can go off of fair value gaps and put it into your own trading strategy and how you trade. But yes, this is what a fair value gap is. Whenever price moves so fast, it leaves a gap between its candles, right? This is a bearish fair value gap simply because the second candle, which is the main important candle, which is the candle that created this gap basically, is the candle that tells me that it's a bearish candle because this is a red candle, and we know red candles are bearish candles. Now, like I said, we use this because we want to see price tap into this level and then get up out of that level and continue to make a downtrend, right? So that's what you want to see ideally. But a lot of times, what you would see is a inverse fair value gap, right? So all the inverse fair value gap is whenever price takes this shit. I think it could. How you do this shit? Nah. Nah. That ain't the one I'm trying to do. Oh, that's why. That ain't the one I'm trying to do. Hold on. I'm trying to see if I can do that. I seen that nigga. How I do that shit? Ghost feed. Is it? Oh yeah, something like that. All right, boom. All right, boom. All right, boom. This may be it. From here to here. Ah, fuck. Trying to see if I could get a good shit for y'all boys. I want to see if I get the best example, bro. Now if this how don't work though, I'm just say fuck it, yeah. I don't think I'm doing it right. But all right, boom. All the inverse fair value gap is instead of price coming to tap into this fair value gap, this original fair value gap that we would have marked out just like this, instead of seeing price tap into it, then getting up out of there, price will move into this fair value gap and it will close inside of this fair value gap, right? So it will leave a bullish fair value gap now. Since we already have a bearish one, what it would then do is leave a bullish fair value gap and it will close within this whole fair value gap, telling us that price is disrespecting our original fair value gap and now price wants to go up. That would then show us that price is on a reversal to the upside. So that is why these fair value gaps are important to us, because price is going to come back to this level. And when it does come back to this level, it's either going to respect it, tap it, and get out, or it's going to disrespect it. It's going to get inside that motherfucker, it's going to stay inside, it's going to close within it, and then it's going to continue to go upwards after it closed within this fair value gap. So say right now, say if this candle just closed right there, where is it, right? We say this candle closed right there. Then after this candle closed, we get another big ass candle like this. Say we get another candle like this. Then after that candle closed, say we get another candle like this. Right? It could be even be small. Boom. At this point, we would have this 1, 2, 3. We would have these 3 candles now. And then at this point, we would damn near basically from the first candle to the third candle, we would then have another fair value gap at that level type shit, right? If y'all could see what I'm saying. Obviously, it's not real candle, so it's kind of hard to see it. But basically, if this was another candle and that was another candle, we would have the fair value gap from the end wick to the beginning wick of that candle. And it would be something like this, bro. Something like this. Like we would basically have another fair value gap in the opposite direction of our original, because this is our original fair value gap, right? And we want to see price tap into it and get out. But sometimes it doesn't do that. It leaves an inverse fair value gap and it disrespects our original fair value gap, right? What price would do would then close within this whole gap and then continue to move upwards. And then from there, we would just see price start making uptrends from here. And boom, price will move upwards. We would start seeing uptrends being made. And that would just be that, right? So for me, I identify the inverse fair value gap as a full reverse whenever it can close above the full fair value gap, right? So right here, this is just the gap of the fair value gap, right? I want to see price close above the full fair, like the full thing. So right, the full thing would be the full 3 candle pattern. So I would want to see price close above this level right here. Boom. At this level, I would want to see price close above, which is the first candle that started the original gap. If price could close above this level, that is showing you like buyers are in control now. Literally, buyers are in control now. And now I would then wait for price to bounce off this level and then take it back upwards, right? Because it has closed above this full fair value gap. And I'm saying that because a lot of times what price would do is price will close in the whole gap of that original fair value gap, but then it will fake out type shit. Like it will literally close within this box just like this. But instead of continuing, it will start coming right back down type shit. It would start coming right back down and it would look something like this. Obviously, this candle will be red, but you know, it would be like this sometimes. So that's why I wait for price to close past all 3 candles before I even enter and shit like that. So yeah, that's a fair value gap, and that is what a inverse fair value gap would look like. You know what I'm saying? Shit. That was the best way I can explain it, bro. That was the best way I can explain it. For real, for real. Let's see if we could draw it out though for y'all boys. Let me see if we could draw it out. I forgot I said I'm trying to make it upon myself to draw all this shit out, y'all. All right, so boom. We're gonna say we got a candle right here. Then we get the second candle, which leaves the gap. Then we get another small candle right here, something like this, right? We're gonna say something like this. This is how price left these candles. We're gonna give you some little wicks. Wick, shit, wrong one. Wick. Okay, don't want to be straight. Wick. And we're gonna leave a wick right here. We're gonna leave a wick right there. And then this new candle will be right here. And then we will leave a wick right here. And we will leave a wick right there. Bro, I swear this not me doing it like this, bro. For some reason, the highlight don't like to be like lined up in the middle or some shit. I don't fucking know, bro. But anywho, so this the best I could do, y'all. This kind of what the fair value gap would look like, a 3-candle pattern. And just so y'all know that it will literally be different colors sometime, I'm gonna change the color of this first candle. It will literally be different colors sometime. Even if this one was red, but this one is green, it's still a bullish fair value gap. Like I told y'all, the second candle of that fair value gap is the important one. That is the one that's going to tell you, is it even a fair value gap? Did it actually leave a gap? And it's going to tell you what kind of fair value gap is it, right? So from here, we will have a box. Like I told y'all, the fair value gap goes from the bottom of the first wick. So something like this. I'm gonna just put it at these levels, bro, simply because these damn lines, right? The bottom of the first wick to the top of the second wick. So something, something like this. Something like this. And I actually want to make it a little smaller and shit. So we're gonna put this whole lot right here. Right there. We gonna put it like right there. So boom, yeah, from here to here. Boom. Similar to this. Like it will be a 3-candle pattern. Price will move so fast, it leaves a gap between the first candle and the third candle. It will look like this. Ideally, what we want to see is we want to see price come up in this level. Or not even just, we want to see price come up in this level. Or we want to see price tap this level. What we want to see is price tap into this level just like that. It comes in there, leaves a wick, and then it gets up out of there. After it gets up out of there, we will want to see price continue to go down from there, continue to move down from there, right? Continue to have down movement from there. That's what we want to see. Price leave this gap, tap into this gap, and start shooting downwards. If it's a bearish fair value gap, and that's kind of confusing because this is actually green. So let me change this shit. Because this would be a bearish fair value gap. The way that I just explained it, that I made it bearish type shit. I forgot that the fucking candle was green. But boom. Feel me? This would be a bearish fair value gap. It was something like this. I draw changed both of them green. One could have been red. Both could have been green. Both could have been red. All three could have been red. As long as this one was red, it's bearish. But if it was green, it was going to be bullish. That's why I changed it, because I had to like reverse the shit. But yeah. So 3-candle patterns, whenever price moves so fast, it leaves a gap between its candles. The gap will look similar to this. We want to see price tap into this level, get up out of there, then start shooting downwards from that point. A lot of the times, price may not want to do that. A lot of the times, price may leave us a inverse fair value gap, like I told y'all. And all the inverse fair value gap will mean is price act like you just want to tap into this level. Sometimes they do that. It tap into it, catching everybody, because a lot of people go try to enter off that and, enter. That's, this is the entry point for a lot of people whenever price coming to that level. But then from that level, what price do is it has an inverse fair value gap. It doesn't decide to keep going down. It decides to trick everyone, and it now decides to leave a inverse fair value gap, right? Inverse fair value gap. Now we got something that would look like this. Now we got something that would look like this. Right? In both levels. But I ain't gonna lie, my drawing ass. But as long as y'all motherfuckers understand, I don't even care, bro. The inverse fair value gap. Now, what if y'all don't understand? Then that's the problem. Inverse fair value gap, right? This was our original fair value gap. We wanted to see price tap into it and get up out of there. But this time it decided it didn't want to do that. It tapped into it. It got up out of there. But on the second candle, it had a big ass move upwards, right? big ass move upwards. And after that big move upwards, it kept going upwards, causing a gap between the third candle and this first candle. Now, right now, this will have its own fair value gap, right? Because now our original fair value gap has been disrespected. This box came from our original fair value gap, right? As y'all can see, this was the box from there. Instead of tapping into it, it closed within this box. Now it left us a new fair value gap. So what we would then low-key do is take this box and put it within this new fair value gap, because the same rules applies. The same rules apply. Now we have this new fair value gap. It is common, very, very common, for price to continue to shoot upwards, right? It may continue to shoot upwards, do its thing. And then it will come back to tap into this new fair value gap, right? It will tap into this level right there. Tap into that level. After it taps into that level, which I think is going to do, continue to shoot upwards from there type shit. Like, you know what I'm saying? That's the idea. Like, that's what we looking for. That's what we would want to see type shit. Obviously, other things can happen, but this is what we would be wanting to look for. So I'm not gonna lie, this drawing is fucked up, but this is the best way I can explain the shit. For real, I'm gonna get a whiteboard, bro. I'm gonna get a whiteboard. I'm write this shit down for motherfuckers, like, cause I gotta draw it, gang. Like, I need a pencil or some shit. But yeah, this is the best way I can understand. So I really hope y'all understood it like this. But yeah, this is fair value gaps, inverse fair value gaps. What the fair value gaps look like, or inverse fair value gaps may look like, and you know, what we will want to see and what we may see that happens. It may happen, may not happen. You know, we just never know how this shit going, chat. You know what I'm saying? But anywho, all right, now we can erase all this shit. Now we have went over candlesticks, time frame, trend. We ain't go trends. We ain't go trends or break of structure. All right, bet. So let me find a good example. Break of structure, perfect example right here, y'all. So as we know, price moving highs or lows, right? And since we know about these candles, this should kind of be an easy part to understand when it comes to these highs and lows, right? So a high is basically a move up, then a move down. Simple, right? The high comes from this highest point, which is right here. That's why it's considered a high, because this is the highest point you know, of this move, right? And a low would be a move down, then a move up, right? And like we were just talking about, bro, what is a move down? A move down is simply a red candle. A move up is simply a green candle, right? So that's just what it is. Like, simply, that's what it is. So within the market, we move in trends. We move in highs and lows and highs, whatever situation may be. So if we moving in a uptrend, right? If we moving in the uptrend, and we're gonna mark this out, this is highs. A high. A high is a move up, then move down. Green candle, then red. So simply keep it like that, right? And before we go into depth, it's a move up, then move down. Simply, we go to any fucking shit you see, right? Right here. Move up, move down. This is a high, right? This is a move up right there. Then it move down, right? This is a high. And this will be that high right here. This will be the high of that high, right? Whoever wick is the highest, the longest at the top is going to be the highest point of that high. You know what I'm saying? So boom. A high is a move up, then a move down. A green candle, then a red candle. So a low is going to be the opposite. A low is a move down, then a move up. And if it's the opposite of what the fuck I just said, what does that mean to y'all? That means this is a red candle, then a green candle. Literally, it's a move down, then a move up. Low is a move down, then a move up. Red candle, then green candle. My bad, y'all. My face itching shit. But nah, boom. Right? And let me change this shit back to black, actually. All right, boom. A high is a move up, then a move down. A low is a move down, then move up, right? And this low, this is going to be the lowest point right here under this level, right? Same thing right here. We can come to any point right here. Perfect. Boom, low. It's a move down, red candle, and a move up, green candle, right? And the low will be the lowest point of those candles. And as you can see, this will technically be the low right here, right there. That will be the lowest point that price went. But right here will be the low of, the actual low of the candle closures of these candles, right? Because this is just how far the price went, but this is where the candles actually closed. So that will be the low of that point, right? So we got that down pat. We got that down pat, highs and lows and highs, right? So within the market, we move in trends, uptrends and downtrends. So since a high is a move up, then a move down, an uptrend is going to be whenever price is moving in higher highs and higher lows. What that would look like is something like this. So as we know, this is a high right here, right? A high is what? A move up, then a move down, right? All a uptrend is whenever price consistently do the same thing, but in higher movements. Every time the high get higher than the last, and every time the low get higher than the last, right? And what that would look like is we got a high. This will be our high point right there, right? Right. So we got a high and we got a low. Well, we got to move up, then we got to move down, right? This will be that high right here. This is the high of that point, right? All price would do in the uptrend is continue to make a higher high now and a higher low, right? And now we have another high, right? Which will be at this level right here. We have another high. And now this is that low. This is that full low right here, right? We have another. I'm gonna just, yeah. Boom. This is that low right here. This is the low. Why is this low? Because at this point, this is when price made that move down. It bounced off this level and made that move up, leaving this to be our low, right? At this level, we got a higher movement. We got a higher high, and now we are getting a higher low. And from here, price just continues to do the same thing. We get a higher high again and a higher low. And price just continues to bounce off these levels. As you can see, it usually always bounces off the previous high, especially when it's moving in the uptrend, right? So that's why a lot of the times we wait. That's why we wait, because we know price will have to have a pullback. So we want to enter during pullbacks. We want to enter during these lows in the uptrend. You don't want to enter during a high in the uptrend, right? Because you want to catch the move up, right? So at this point, we want to, whenever we got a high, then a low, then a higher high, we know it's going to be a higher low, and that higher low should come back and hit that previous high. So we would then want to enter around this point, making our stop loss under that previous level, which will be right here, aiming for a higher high, because we are moving in uptrends, higher highs and higher lows. So now we will want to be aiming for a higher point, which will then cash us out, right? Off of entering during these lows and not during these highs, right? And then price just continues to do that during the whole time. We're moving higher highs and higher lows. Uptrend. Right? And a downtrend is literally the opposite, right? And a downtrend is the opposite. In a downtrend, we have a move down, then we have a move up. So in a downtrend, all price is doing is making lower lows and lower highs. It's the opposite of an uptrend, right? So then from this point, price will make a lower low and a lower high. And again, a lower low and a lower high. And as you can see, price continues to move downwards from these levels. It moves downwards, right? And in a downtrend, we don't want to buy at the low point. We want to buy at the highest point so we can catch the move downwards, right? We got a low, a high. We got a downward movement. We want to wait for that pullback. In the same that goes for the uptrends. Price always come back to the same level that it broke out from. It always bounced back. So we need to be patient and wait for price to come back to these levels, right? Which will be about right here. Whenever price come back, that way we can have our stop loss at those previous points, right? And our take profit will be past this low because price, we know in the downtrend is making lower lows. So we would expect for a lower low. So we could put price a little bit down here, similar to that. And as you can see, it would have cashed out if you're buying at the highs. You want to buy at the highs. You don't want to buy at the lows because boom, if you decide to buy once price get to this point, because you see price shooting down, okay, cool, it's going down crazy. You will literally buy here. You will buy there. And you will literally buy at the moment where price is having this pullback when it's time for price to come up now. You feel me? To make that higher, that lower high. You don't want to hop in when it's time for it to come up. You want to hop in once it's done coming up. Now it's time to go back down, right? And you hopping in when it's already low will cause you to hit your stop loss 9 times out of 10. So make sure y'all, timing is everything. Like I told y'all, currently timing is my problem. So you know what I'm saying? But boom. Yeah. So this is going to be a downtrend. It's going to be a downtrend, y'all. And let me see what this shit talk about right quick. It ain't really did nothing yet. Yeah, probably would have hopped in on it coming back up, but it ain't really trend its way up there. Anywho, if y'all want to join the community, just comment below. I'll get you joined inside the community where we all give advice to each other and trade together. You feel me? Oh shit, Bitcoin shot up crazy. They said Bitcoin is up, y'all. Did it go back above my level? Oh shit, y'all, it came above my level too. I've been waiting for it to hit this level. Okay, B. I missed my entry. This would have been an entry right there. Price broke above this level. Enter right here. Yeah, remember I say enter on these lows. Enter right there. Catch that movement up. It's cool though. But anywho, so yeah. A high is a move up, then a move down. A low is a move down, then move up. This is what the uptrend look like. Higher highs, higher lows, downtrend, lower lows, and lower highs. So to make this real world example for you guys, let's come here. Perfect. Hey. So as you can see, price is moving in a downtrend at this level, right? And soon after it was done, it moved to a uptrend, which is exactly where we will see that price starts to break structure. But to make it clear, the uptrend started, it's a low right here. Then we have a high. Then we have a low. Then we have a high. Then we have a low. Then we have a high. Then we have a lower low. Then we have a lower high. Then we just gonna go all the way down here, y'all. A lower low, right? So this is a clear downtrend. This is a clear downtrend, right? High, low. And as you can see, these lows always get hit, right? Price comes out of here. Price push up, then it comes out, right? After it comes out, it pushes up again. After it pushes up, we got a low now. Now we got a high. Now we're going to mark out this low. It's going to take out that low. After that low get taken out, it's going to push up again. Mark out this low. It's going to take out that low. Then it's going to, you know what I'm saying? That's why you want to wait. You want to enter on these buys. You want to enter your sales when it pushes up. You don't want to enter here. If you enter here, you would jeopardize yourself because you would then have your take profit above these levels and you will literally walk yourself to your damn stop loss. So that's why you want to wait. You feel me? You will walk yourself to your stop loss because before it goes down, it's going to have that pullback. You bought too late. Don't buy on the lows of a downtrend. Buy on the highs, right? Instead of buying there, you supposed to buy. Instead of buying there, you want to buy at these highs, right? You want to buy at that high and then set your stop loss to the next point. Because now that you got it at the next point, if price were to come past this previous point, it will literally be breaking structure. It will be changing the full structure, showing you that it no longer wants to go down no more, right? But right now, if you was to buy right here and price at your stop loss, that's not showing that price don't want to go down no more. That's just showing that it had a pullback. You know, it needed to come back up right quick. But that's not showing that it reversed and it's time for it to reverse. You want to make sure your stop losses are at points that if price hits your level, bro, price is just literally changing directions type shit. You don't want to have it at points where price just need to breathe a little and then hit your stop loss. So that's why we don't want to have these super tight. We don't want to have super tight stop losses, and we want to have our top stop losses at good levels. But anywho, if you enter on the high of this downtrend, then you would then want to put your take profit past this low because we're moving in lower lows and lower highs. So we can assume that it should be a lower low now, right? So we will put it somewhere like right here. And as you see, you will literally cash, bro, with no drawdown. Like you didn't even go into negatives if you can just follow the structure, right? Just follow the structure. And that's why I trade off of trends because I like when price is moving clean, bro. When price can move like this cleanly, it's easy for you to hop in because you know what price is doing in the uptrend or a downtrend. But a lot of the times during trends, bro, you get hit with a lot of liquidity. So it just be like, you know, shit like that. And hopefully I get to show y'all a good example of liquidity too. But yeah. So we get a downtrend right here. That's a clear downtrend, as y'all can see. And within this downtrend, y'all can see we got a move up and move down. So the reason that I marked out these specific points is because you can kind of see that at these levels, at the top of these highs and lows and stuff, they are literally swing levels. So when I'm marking out my highs and lows that actually matters, don't get me wrong, it's highs and lows all over this fucking market. Like all of these, this is a high, this is a low, this is a, you know what I'm saying? This is literally highs and lows all over the market. But whenever you're marking out your shit or trying to see whenever price is actually reversing, you want to mark out actual swing levels, like swing highs and swing lows. So what I mean by that is at these levels, like literally at the top of this little arrow, you can see that when it get this high, it kind of has a little like at this point, it gotta have a little effect to the market. It has a little swing right there. This one don't have a real effect, to be honest. Right here, you kind of see that little swing. Like you see the swings, you know what I'm saying? So that's kind of what I mark it out. I'm marking the parts that actually kind of affect the market. But still, again, it's highs and lows all over type shit, all over. But this is how I do it whenever I'm marking it, so I could just be identifying and tracking my highs and lows as they making that downtrend. But let's see. Let me see if I can show y'all a. I don't know if it's a good one in this one, but boom. So yeah, as y'all can see, prices moving downwards is making downward movements, right? Until it comes to a certain level. Trends do not last forever, but the trend is your friend. So follow the trend, especially on these higher time frames. right? Don't go against the trend, bro. If the hourly, the 4 hour is showing that prices in a downtrend, and then you go to your 5 minute time frame and it's literally in an uptrend, bro, wait till it comes back to a downtrend. Because if it's in an uptrend in the 5 minute time frame, but on the hourly time frame, it's in a downtrend. What that means is prices probably just correcting. Prices having a small pull up right quick before it continues to go back lower. So stop FOMOing and just fucking wait, bro. Wait for price to show you that it's doing the same exact thing that it's doing on the hourly and the 4 hour time frame. You have the best trades whenever your hourly, your 30 minute, your 15, your 5, every single time frame is showing the same exact thing. A lot of the times they do not do that. Even though they are all correlated with each other, they sometimes show different things because price could be moving in a smooth uptrend on the hourly time frame, but then you come to a 15-minute time frame and it look like it's going downside. So it's like, you know what I'm saying? You get confused. That's why you need to be reading higher time frames. The higher time frames are for you to analyze and read, bro. The lower time frames is literally only for you to see what's going on inside once you already analyze and once you're ready to take your trade, so you can figure out, like, you know, where you can enter it. Because we don't enter on the hourly time frame. We enter on like the 15-minute or the 5-minute time frame when we actually get inside these trades. But we wait for our hourly key levels to be hit before anything. You know what I'm saying? I'm really peeping out for this Bitcoin play, bro. But I don't know. Bitcoin been killing me, bro. I think I'm off for the day too. But yeah. Oh, okay. Bitch, I damn near, I ain't gonna lie, damn near lost my whole fucking thought right now. All right, boom. Boom. All right, boom. So we see prices moving in a downtrend. Right? And I want to erase this. I'm gonna do it a little better because I want to show y'all how. I'm gonna just do like I'm not gonna even do a full one. Just low, high, low, high, low, high. Shit. This is a low and a high, but it's just so like how it's built. And then we got low, high, and we got low. All right. So boom. This how that downtrend was moving. Lower lows, lower highs. Okay, cool. So we know price trend, market trends all day. You know what I'm saying? So we consider price to have a breaker structure whenever it closes past a high or a low, right? So in a downtrend, you go draw it out. So in a downtrend, we have what? We have a low, we have a high. We have a lower low, we have a lower high. We have a lower low, we have a lower high, right? This is how price trends. This is how price moves. And I'm going to put a point at every low, boom, at the lows. Now, when price comes up to make its full, when price comes up to make this high, it needs to stay below this level, right? We want to see it stay below this level because it's in a downtrend. So it should not be trying to come back above that level. But a lot of the time, what price would do is on this high, instead of coming back down to make a lower low, price will decide to go up. Price comes above this level, and then it will start to make a higher low, and then it would then make a higher high, then a higher low again. And then as you can see, price just starts to change directions, and we are now in an uptrend, right? So that's usually how it happens a lot of the times, right? And the area where we could point out a full breaker structure is when it takes away this swing point, right? So at this level, when it starts to make higher lows, that's when we can tell ourselves, okay, price may be reversing. Just be on the lookout for a reversal. That's when you want to get out of your sell plays whenever you see price start making higher lows, because in a downtrend, price is moving in lower lows and lower highs, so it shouldn't be no higher lows. So whenever we see price start making this higher low, that will make us start thinking like, hold on right quick, right? Then we would get a high that's not really too high from the level, but it's not going in a downtrend. It's not going in a down direction no more, right? So we just being skeptical and we're waiting. Then we get a higher high. This higher high is the high that told us that we are now in a reversal. It has now broke structure to the upside. And why is that? Because it has now closed above this previous swing high, which will be right here, right? In a downtrend, this will be that previous level. So it's considered a breaker structure to the upside whenever price closes above that previous swing high. So it's breaker structure to the upside whenever price closes above the previous high in the down trend, right? So literally it's breaker structure to the upside whenever price closes above the previous high in a downtrend, right? So this will be that previous high for us because it's a low. Price started to change and stuff like that. We got a high, we got a low, right? So this will be the actual previous high right here before we got this move up. But this is that swing high of the downtrend. And for me, I wait for a full swing reversal because that's showing us like buyers are literally in control now, right? So when price could close back above this level, that will be showing me that it's now a reverse coming in the market, right? And then at this level, we will be want to change our buys. We want for price to bounce off of that same level, holding the structure, and then we could enter here, making our stop loss below this level now because price should no longer go back down that way. And then we would target at these highs, right? We would target the highs, right? So similar to something like this. And as you can see, it would have cash, right? Just off of you knowing what breakup structure look like. And the same goes for a uptrend, a uptrend being broken structure to the downside, right? And so everything is explained perfect. In the uptrend, we moving with higher highs and higher lows, higher highs and higher lows, right? This is how a uptrend will move, right? Higher highs and higher lows each time. So that's what we would want to see. But a lot of times, price would then break structure to the downside, right? And what you would then see is price start to, is making this high, is making this low, but then in that low, it starts to make a high, right? And you will peep that this high is lower than that previous high. It starts to lose momentum and it starts to make a lower high now. So that's showing you that it may be a reverse in the market. From there, price starts to move downwards and it makes a lower low, right? And then it makes a lower high again. And then it finally makes a full lower low. And then a lower high again. So it's the same way. Whenever price broke below this swing level of this uptrend, that is where I would have thought that price is on a full reversal. But even before then, when price came right here, made this low, they made a high that was lower than this previous high. That's showing us this price is starting to reverse. But I don't get in until it can fully close below a swing point because that's showing you that like it's holding structure and the sellers are now in control fully now. You know what I'm saying? So in the uptrend, it's considered a breaker structure to the downside whenever price can close below a previous low, right? So in a uptrend, it's break of structure to the downside whenever price closes below that previous swing low. Right, so once it closed past the previous swing low, we would know that it's time to reverse, go to the opposite side now, right? So this is kind of how it looks like, right? The trend is your friend, follow the trend, but the trend does not last forever. So identify and know when it's time for it to break structure or when it's about to break structure, right? So with all that being said, let's come back to these examples right here. Boom. Price is in a downtrend, just like this, a downtrend, right? And a downtrend is considered a breaker structure to the upside whenever price can break above the previous high, right? So from what we looking at, this is the high, this is the low, right? This is the high point, this is the previous low point, right? So whenever price can close past this point, it's considered break of structure to the upside, right? And as you can see, we got a full break above this level. Then we had a pullback, right? After this pullback, we continue to get uptrend from here moving forward. After price broke structure, right? After price broke that structure, then price came up here. It made a high, then it made a low. Peep. And this is very important because a lot of people will be like, this pullback happened. Price is starting to make a downtrend again. But look at the swing points. And that's why I mark out the swing levels so much, because that's what you want to see. This is who actually holding that structure. These swing points, right? So we make a swing high. We made a higher high. But with these swing points, we start to make, look, all right. So boom, once we broke above this high, y'all see we got counter closures above this point. But after we got them counter closures, we got a high, then we got a low, right? We got a high, then we got a low, and price started moving downwards. So at this level, when price is moving downwards, a lot of people would have thought that price is going to continue to go downwards. It's going to continue to make that downtrend. But what they failed to see is that price made this low, right? Price made this low right here, and this swing low point is still higher than this one. It's still higher. So that's showing us that price is still holding uptrend structure. So once you see something like this, you see that price is still making that higher low after it already made its higher high above the level. That should give you confidence that you should be able to enter this long position now, because the high is still, the low is right here. This is high, this low is now higher than that low. So we could be able to enter right here. We will put our stop loss below that point now. And then this is the high we will assume for a higher high, which will be about right here. And as you can see, it would have cashed perfectly without you going into drawdown, without you going into the negatives. Just off of you knowing market structure, this off you knowing what breakup structure look like, this off you knowing that yes, price will have pullbacks, but pullbacks does not mean a reversal. You need to pay attention to the full market structure. It will only be considered a full reversal back to the downside if price could come back below this level. Like me, if I was in that situation, I wouldn't even want to take it until price could show me that, instead of making these highs and shit like that, price could come up. It may come up